Good morning, traders. Welcome to Benzinga's pre-market info show. Today is Friday, November 1st. It's a nice and mild morning in Southfield, Michigan. Hope the weather's being as nice to you wherever you are. Quick futures check. S&P futures trading up 3 points to 1754. Dow Jones trading up around 44 points to 15,524 at last check. The Nasdaq is up around 9 points. Crude oil and gold both spiking lower over just the last 5 or 10 minutes. Crude trading down to around 95.77 per barrel. Also gold trading down to 13.13. On the pre-market info show this morning will be retail guru Brian Sozzi. Look for that interview around 8:45. Also a couple quick teasers for next week's guests. We'll have Matt McCall talking ETFs on Tuesday. We have entrepreneur and angel investor Andy Swan on Thursday, and Matt Porzio from Intralinks on Friday. Don't miss those interviews. Had a great interview from Sang Luch yesterday. If anyone has any questions throughout the course of the show, please post in the chat. We have a couple people watching that chat at all times during the show. If you ask a question, we'll be getting back to you in just a few seconds. Also would encourage everyone to use hashtag pre-market in their morning Twitter posts. All the tweeters out there, please use hashtag pre-market. Jumping into the news, earnings from last night, we did have AIG reporting results. Stock currently trading down around 5%. The big mover this morning, First Solar, one of the best in breed solar plays, trading down around 7 or 8% this morning. Following quarterly results, we will get to those a little bit later. Waiting on an earnings report from Chevron. Let me just make sure that one didn't come out yet. Still waiting on quarterly results from Chevron. Look for those over the next hour or so. The U.S. automakers will be issuing data for the month of October today, already having Chrysler reporting monthly sales figures. Chrysler did report a 11% gain in October sales. We will have Ford and GM out momentarily. Shares of Vodafone moving last night, following a Bloomberg report that AT&T is rumored to be exploring a possible bid for Vodafone as soon as next year. Shares of Vodafone did spike higher yesterday following the report. Paired some of those gains, but still closed yesterday's session up about 1.5%. Shares of Barrick Gold down about 5% this morning. Company announced a plan to reduce that and also offer some 163 million shares. Once again, Barrick Gold shares trading down more than 5% this morning. Did have news out of Brookfield Property Partners saying that they will be investing $1.4 billion and raising their stake in General Growth Properties. That's ticker Golf Papa. Brookfield Property will now hold a 32% stake in General Growth. One more mover this morning, Western Digital, trading down around 2%. The company announced that Hitachi priced a nearly 11 million share offering by Hitachi. A couple of economic data points this morning. We will have market US PMI final and a manufacturing reading out of ISM. Heads up for next week on the economic front. GDP will be out on Thursday, and the following day there is a jobs report scheduled. We're going to talk imbalances here in just a few moments, but first, Joel, how was your Halloween?
Yeah, it was excellent. We had a pretty good turnout. But we had some rain, but we had a nice turnout. And I want to ask everybody out in the chat room here, what was your favorite Halloween costume? Because I had a really good one by a kid in the neighborhood. Brent, what was the favorite one that came by your house?
I had a whole flock of birds that came roaming up on my porch, squawking and doing wing motions. That was pretty cool.
Okay, well, I'm not sure if our listeners are old enough to remember the Frito Bandito. Does anybody remember the?
Frito Bandito. Is that like the
Joel, you're dating
tortilla
yourself here
chips?
again, I think, on this one.
Googling this one right now.
Oh, come
Frito
on.
Bandito, he's really dating himself on this
Oh
one.
wow,
Well, just quickly,
black and white cartoon.
yeah, Brent, he kind of
Black
looks a
and
little.
white. This was before color was out.
Brent, he kind of looks a little bit like you. He was the symbol for Frito chips, which I'm sure all you guys eat, and he was the Frito Bandito. So
Did
that
Frito
that
Bandito
was
come by your house?
yeah, that's who came by and had a little spat with Lisa over handing out the candy as usual.
Oh my gosh.
Yeah, I was like just throwing the candy out. Oh, we're not gonna have enough candy left over. So then we started rationing, and then of course no kids came by, and then I started throwing it all out again. But we ended up with some leftovers. I'll bring them in for the kids. But Dennis, is there any trick or treaters out there in your neighborhood?
Yeah, there was a few actually. I was surprised because with the rain, I was like, "Oh, we're not going to get any." So I started eating the candy, thinking we're not going to have any problems here at all. And all of a sudden, they were coming in droves. So we actually did run out of candy too. So I guess I shouldn't have ate so much candy.
Oh
But
man,
maybe I'll be a
meddling
little
kids
bit.
eating all your candy.
Yeah. Well, that's it. I'll have probably that sugar hangover here this morning. So, anyways,
Sugar
Joel.
doesn't make you sweet, Dennis. Just want you to know that.
I don't know if anything makes me sweet. Joel, we had lots of movement here overnight, and we had lots of movement on the close yesterday. We'll get to that in just a second, where we had some huge imbalances pressing the stocks down. But the overnight action, 4 point range, 1755.75 the high, 1751 and a quarter the low. We've had some movement from First Solar, AIG overnight. Chevron, we are still waiting on the, waiting on the numbers from them. I'm getting a tickle in my throat from all that candy last night. But looking here, I just want to go into the S&P futures. Actually, we did sell
Okay.
off in the last few minutes. If you bring up the chart from basically 3 o'clock, probably till 4 o'clock, even on individual stocks, there was some huge sell imbalances that were that happened right at the close. We see this at the end of the month a lot of times, where you get different institutions jockeying for position. Well, a few institutions wanted out big time, and they got out big time, and they were selling the stocks into the close. Stocks like ExxonMobil fell $1 in the last 10 minutes. Chevron fell $1 in the last 10 minutes. Goldman Sachs fell $1 in the last 10 minutes, and about $2 in the last 20 minutes. What's some of the technical saying on these things?
The technicals are pretty easy, Dennis. We took it right down to 17.50 and a quarter. We had a couple lows there earlier in the week. Got there in the pre-market. We're getting a little bounce. I'm giving that 17.50 and a quarter 6 stars, Dennis. We take that out today, and we may get that sell-off I've been waiting for the last 6 months. Coming back on the upside, there's really no major resistance above that overnight high of 55.75 until you get to the 17.60 handle. But really important number on the downside is 17.50 and a quarter.
Joel, is that the highest level that stars can be rated?
I've
Six?
I've actually gone to a 10 star before.
Holy cow. I don't even want to know about that.
10
Forget I
stars.
asked.
What has to happen
That's
to
a
get
lot
a
of stars.
10-star rating?
You would probably need, 7, 8, 9, or maybe 10 lows or 10 highs in the same area. So it doesn't happen very often. But yep, that's how you
It'd
get
be
a
like
10
the
star.
Great Wall of China trying to go through it or something, if it was resistance. Let's talk about some of these individual moves that happened just in the last 15 minutes. Bring up the chart of ExxonMobil just so we can look at this one just for the last 10 minutes here of the trading day. It was trading up at 90.50. These imbalances post at 345. They become public knowledge. But on the floor, these sell imbalances, and I'm going to explain the imbalances in just a second, are disseminated starting around 2:30, between 2 o'clock and 2:30. So the people on the floor know this information a little bit ahead of time, which is probably why you see some stocks selling off a bit earlier. But at 3:45, they're publicly disclosed to anyone who's buying the imbalanced feed. And the imbalances were quite large. If you don't know what an imbalance is, it's basically just the difference between the market on the buy closing orders and the market on sell closing orders. So there's an order type called a market on close order, where a participant can basically send that to get the closing print. If you send a buy market on close, you will buy at the closing print. If you send a sell market on close order, you will sell on the closing print. if these market on close orders are that there's a lot more sell, say there's 300,000 more shares to sell than there is to buy on the close, they will post that as a sell imbalance of 300,000 shares. That information obviously is important because that means at the close there's going to be 300,000 shares to sell, which can significantly move the price. Well, that's what happened. ExxonMobil, I believe, was up to 700,000 shares to sell, which is significant. Now, some days these imbalances get offset, but typically at the end of the month, a lot of times they don't. And that's what we saw with ExxonMobil. You can see it was trading up at 90.50, and the last few minutes went all the way down to 89. I'm trying to grab that low. 89, like 32 ish, closed at 89.62. So a big sell off there for ExxonMobil in the last 15 minutes.
Dennis, explain why they put that information out there. Why do they publish these imbalances?
They're actually looking for help, basically. They want some other traders to provide liquidity to the imbalance. So basically, the designated market maker on the floor says, look, guys, I got to buy 700,000 shares here because there's 700,000 shares to sell. They still have to be the buyer of last resort on their own closing print. Anyways, they're at the NYSE. So they're advertising and saying, look, I need some help here. Does somebody want to offset this? So what traders will do is they'll sell the stock and then place the MOC opposite order to basically provide liquidity to that closing print. So if there was a sell imbalance, they'll sell the stock in the open market knowing that the sell imbalance is probably going to drive the price down and then cover on the closing print. And it worked very well. It worked like textbook yesterday for a lot of traders there because obviously if you got that information, ExxonMobil's up at 90.50, you turn around, sell short in the open market, and then turn around and send the market on close. You covered it at 89.62 yesterday. So, you made a quick 90 cents. This does not always work, though. Sometimes these trades get oversubscribed to. They can actually flip where the sell imbalance will become a buy imbalance. Sometimes there's games played here. You have some different firms that do shady activities, putting fake orders out there, taking them out. So there is games played too. But typically at the end of the month, they are usually more real than on other days. And this also applies to the third Friday of the month with option expiration. They're typically more real those days too. So you basically have at least 2 days a month, the third Friday of the month and the end of the month, where these imbalance plays often do work really well.
So it was an artificially low print at the close there, kind of the same way in the S&Ps as the sentiment took the
Yep.
index down. So now you got it up 35 cents in the pre-market. You probably have some traders that have some pretty nice long positions here. The would
Yep.
be are looking to scalp and liquidate off the open. So we're looking right now trading at 89.97. Not a lot of volume here. That close is an important level. That's going to be a good support level coming ahead of the open there, and then coming back on the upside. I mean, we came really hard down through that 90 handle. We could very well just float back up to 90.55, which was yesterday's high, unless you were trading on ARCA at the open and you popped some
Oh.
customer at 90.96.
Yeah, actually, if you just while we're talking about ExxonMobil here, there was a trade through, and a trade through occurs. So basically, the definition of a trade through would be a trade occurring at a price that isn't the best price. And this can happen on one specific exchange. I've explained these in the past. It gets pretty technical here, but the bottom line is the NBBO, which is the National Best Bid and Offer, is protected, meaning no trade can occur at a price inferior to the best bid or offer. But once the best bid or offer trades out, then actually prices can occur at inferior prices. And actually, we saw right at the open, 1,000 shares, I believe, ticked up at 90.95, and another couple hundred at 90.96 on PCSE. So it just basically printed through the opening liquidity there. And you can see that if you're looking at your charts, it was just kind of, and it wasn't erroneous. It was a real trade. Somebody really bought it up there. But that trade, there was definitely liquidity, a lot of liquidity, much lower than that at 90. So somebody just got a really bad print because they didn't route their order efficiently.
And
So
any other stocks that were hit on these sell imbalances? Let's just
yeah,
go
going
over
back
them.
to sell balances, and if anybody in the chat has a question, want me to explain something a little more detailed, because we're getting pretty technical into market structure a little bit here when we're talking balances and stuff. Anybody in the chat's got a question about it, I can explain it a bit further here, because I want you guys to understand this, because it really is market impactful. Yeah, Goldman Sachs. Take a look at the chart of it from the last, basically, hour and a half of the day. So obviously, maybe some people on the floor knew this one was going to have a sell and bounce. We're probably selling it before the information was publicly disseminated to everyone. Like I said, it comes out on the floor a little bit earlier. You can actually subscribe to that feed, the early feed too, but it's quite a bit of money. And then obviously in the last 45 or in the last 15 minutes of the day, it went from like 162 all the way down to close at the low print of 160.86.
Dennis, really quickly, could you give an example of a time when the imbalance would have switched from the sell to the buy or the opposite way? Trying to
Um,
understand that dynamic a little bit.
That typically happens, I'm telling you, Brent, like 2 out of 3 days you see stuff like that happen. And what can happen, it can be an offset. So I don't have a specific charting example here, but what you will see happen if stock XYZ flipped, you'll often see a whipsaw effect where the stock was trading down, where everybody's thinking, oh, it's going to close down, and then in the last 30 seconds it flips, and then everybody's scrambling to cover because all of a sudden they realize, oh, I'm not going to get a good closing print here, and all of a sudden I'm short the stock, and now it's a buy imbalance, and now I'm in trouble. So you'll see stocks whipsaw. I've saw it in even stocks like General Electric move 30-40 cents on a huge buy imbalance or sell imbalance flip. So, and that's what I call them as flips. And these can sometimes be done by games, people playing with it a bit. A lot of times, though, it's just it's crowded or it's just offset. Another institution just comes in to buy more because you got to think, if you're Fidelity sitting there and all of a sudden somebody's advertising they can sell 300,000 shares, maybe you want to buy 600,000 shares and you're just waiting, and you put it at the last second. So, you can play it like that too. So there's different ways that things like this can happen.
Well, first, quickly, Dennis, for any Goldman Sachs traders out here, you've had almost 3 days of identical ranges. So if you're trading this thing, please be aware that you've had 3 highs right in the 163 area and 3 lows right in the 161 area. So a couple good technical numbers here. Modern Eclipse is just asking if you saw that similar action in Apple yesterday, and Apple really didn't. Apple had a really tight range yesterday, so I didn't see that kind of activity in Apple. Did you, Dennis, or did
And
someone?
Apple's a Nasdaq stock. They do have their own little thing, but they're not like the New York Stock Exchange stocks where you have these 345 public imbalances come out like this, where you got a guy on the floor that's trading it still. It's all electronic. It's done differently there. So when I'm talking about these imbalances, I'm more talking about New York Stock Exchange stocks. So stocks like the Goldman and the Exxon, but not Apple. So I think Apple's kind of do its own thing. Although sometimes Nasdaq stocks can move down just because there was over $1 billion to sell yesterday worth of stock across the New York Stock Exchange. So that's significant, and that can drive the overall market down too, which we saw. And obviously, it can drive stocks like Apple down too, just because of that sympathy effect. The market's going down, so Apple's going to go down as well. But even look at a stock like Johnson & Johnson, Joel. This is a stock that typically doesn't move a lot. Obviously, tighter ranges there. But in the last 5 minutes or so, it went from 92.97 and closed down at the low print at 92.61. It is bouncing back to day two at 92.85. A lot of times you have to consider these, especially if you're a short-term trader and you're looking just trading opens and closes and stuff like that, looking for 15, 20 cents. Well, right now, this was an order flow thing, and a lot of times these order flow moves get retraced. And you're seeing here in Johnson & Johnson close at 92.61. Now it's trading up at 92.85 because a lot of people realize, well, that print was just too low. That wasn't based on company fundamentals. That wasn't based on technicals. That was based on order flow. It was based on some institution wanted out, they got out, and obviously the stock is kind of bouncing back here now. So, and that's what you're seeing here in the pre-market. It's actually back at 92.85. Philip Morris, just one other one just to highlight, and then we'll move on here. Philip Morris had a huge sell-off here, PM, in the last few minutes there too, Joel. 89.90 it was trading at, and ended up closing down at 89.12 on the low print as well. And that was all big sell imbalance on that one too.
So are you telling me I should have covered my weekly 93 put and in Johnson & Johnson on the selling balance?
Yeah, it might not have been a bad idea, actually. I didn't know you had that one. I could have said, hey, big sell imbalance here. So So yeah, so they really move stocks, and that's information that if you don't have it, obviously, It'd be good to call your retail broker and ask if you can if they have those feeds first of all, if you can subscribe to those feeds, and if you don't, you might want to consider getting another broker because it's important information to have at the end of the day. Not as important as it was maybe 10 years ago when these stocks really moved on these things. Now, obviously, you got a lot of high frequency traders that will offset it, and usually the moves aren't huge except for at the end of the month. So it's basically like a once or twice a month phenomenon that can really move the stocks. Let's move on to some of the individual issues that are moving here this morning. Let's start with First Solar. It's up big time here in the pre-market. They obviously reported good earnings there last night. $2.28 is what they made. Is that right? $2.28. They were supposed to only make. I don't know if I wrote it down right. Were they only supposed to make $1? Brent, were they only supposed to make $1? They made $2.28. Is that right?
Yeah, they blew out on the bottom line there.
Cow.
Actually, yeah, it's 228 versus $1, and then
Wow.
the revenues were blockbuster as well, come in at 1.27 billion versus expected 988.63. Company also raised guidance on the bottom line while bumping down guidance on the top line, and then sold a 250 megawatt facility. So traders are really liking it, and it looks like it's also catching a continued wave from yesterday when SunPower was moving the whole sector up. So a lot of those solars are on the move. Trina Solar, SunPower, First Solar, all those are on the rise this morning.
Yeah, that pop, the initial pop took it up to 56.12. We've come back down, and now we're consolidating here at the $54 level. So that's going to be a good level to take a look at here. A lot of trading going on at 54. A lot of buyers here are supporting the issue at the 54. So 54 and 56.12 are the levels we're going to be looking at here in First Solar, Dennis. And also, I know people make fun of us, looking at the charts and pay attention to the charts. But guess what that high was that First Solar had back on October 22nd?
Yeah, I'm looking at it right now. It's kind of kicking myself a bit. 56 and a quarter. We know I got run over my Facebook when I was trying to sit the orders out there. Obviously, after the Facebook earnings, it ran me over. So I'm kind of almost like the little battered housewife syndrome I have going on. And I did not sit my First Solar order out there. And if I would have sat the First Solar order out there, I probably would have been sitting at probably between 56 and 56 and a quarter because of that double top that was there, and probably would have got executed. So here I am. Facebook's still costing me money because I could have made money on that First Solar trade.
Right, and looking at some of the other brethren here in the solar sector, SCTY here, getting a $1.40 bounce here. Bad day yesterday. Interesting technical formation if you're trading SCTY today. Let's keep an eye on this $55 level. You had a series of lows, 3-4 lows right around 55 going back a few sessions. Now you're coming back into that former support, may act as new resistance.
AIG also reported there last night, and the stock is trading down. Actually, the report looked pretty good here. Was there something else? I don't know if Brent knows what else. It was 96 cents versus 86 cents, which looks like a beat. But they are selling the stock off here over $2 after hours and in the pre-market here on 564,000 shares, so it's down significantly. I'm not sure if there was something else in that report that they didn't like. Brent, did you take a look at the AIG report?
Digging through right now. Give me a sec here, Dennis.
Yeah,
let me do the technicals on this. You did hit 49.07, then you spiked down again to 49.05, getting a little bounce here off that up to the 49.75 level. So right now we're trading. Those are your parameters: 49.05 and 49.75. Looking at this chart from the daily perspective, had a nice run up here, trading near the highs. The news is knocking it back down here. A lot of people probably stuck short this issue. Not a major number at 49. Under 49, you got a ways to get to the next major support level of 48.24. But I'm looking nice round number like 49 there. You're getting 2.25 points back. A stock that was trading over 53 just a few days ago. So we'll see if that pre-market low holds.
Also, we're going to be breaking with the Chevron numbers. As soon as we get those, we will send them to you. Brent's probably going to break in with those any minute now. They usually report around 8:30, so we're still waiting on Chevron. WCG did report here too. WellCare Health Plans. Not a lot of volume on this one. Only 1,000 shares have traded. It is offered down here in the pre-market. They beat $1.56 versus $1.52, and 2.5 billion versus 2.37 billion. But they didn't beat by enough, I don't think. And the stock's trading down here over $1 in the pre-market, at least offered down over $1 at 65.60.
Dennis, you called it. Chevron reporting Q3 PS 257 on sales of 56.6 billion. I see an estimate of around 270 from Chevron, so it does look like a miss on the bottom line.
And I believe they did. They did forecast that in there a couple weeks ago. I remember they made that announcement. The stock dipped down and then just went straight up. A couple tight ranges here. If it goes into super rally mode here, folks, keep an eye on the 122 level. Basically a double top in Chevron from Tuesday and Wednesday. Coming back on the downside here. Bunch of lows grouping in the 119 handle. So let's call yesterday's low 119, I believe 81. Call that your minor support level. So a couple levels to keep an eye on in Chevron Corporation.
Couple dynamics to consider here too, because it was a stock that was obviously impacted by the closing imbalance too. So it was trading around 121, got knocked down to 120. So when I'm looking at this thing, I'm thinking, well, the real place where it really should have went into the earnings announcement would have been 121. So when it trades down to 120, which it just ticked down to, I kind of feel like that's almost like down a buck, because that was like an order flow thing. So at 120, which is trading right now, I feel like it's actually trading down, despite looking at the close right now, it's 1996, and trading at 120, it actually says it's up 4 cents. But I don't feel that way. I feel like it's actually trading down a little bit on these numbers, which you would think when they miss, that's probably what's going to happen. So that's the other dynamic to consider, is how much did the imbalance play here affect, the closing price, and obviously you have to take that into consideration when you're trying to price out whether it should be down or up from the report. But it's sitting here, not a lot of volume yet. We'll come back to Chevron when it digests these numbers in a few minutes, and we'll see where it's trading. Barrick Gold here. Let's talk about it briefly. I know we got gold. If you just want to talk briefly about gold ahead of time too, gold's trading down here about $9 right now in the pre-market. So obviously that's putting in a pressure on the gold stocks themselves. We'll get to Barrick in a second because they actually got a secondary offering that they're pricing lower too. But what do you have on the gold there, Joel?
A few days ago, a couple tops at the 1360 level, a few days of consolidation, and then we fell out of bed yesterday. What I want our traders to pay attention to in gold is this 1310 level. We had multiple lows going back before you had that run up to 1360. You had, let me get the exact lows here for our traders, 3 days in a row. You had a 13, 11, 20, 12 even, 0950. Call it 10 even. We've gotten to 1120. That's your major support. If not below that, you could easily see that $1,300 level coming back on the upside. Just the close here is even quite a ways away, so I'd say your resistance will be coming in like at 314, 315.
And then you got Barrick here trading down a cool $1.50 or $1.20. They did announce a secondary after the bell. They're pricing 163.5 million shares at 18.35. They're using the money to cut debt. So, I mean, it's a good thing they're going to try to get rid of debt, but at the same time, nobody likes dilution here. We know when they come out with these prices at these secondaries, this is often a magnet for the stock. It's getting driven down. It's actually trading below that price right now at 18.20. So interesting enough that it can sometimes act like a floor of these prices, but at least a magnet to pull the price down to where that secondary price is. But it's actually trading a bit below there this morning.
What a time to do a secondary, huh, Dennis? After stock has just gotten killed, to do a secondary at these levels, it's a little bit surprising. Taking a look at the pre-market here, we've made a low at 1810, really not getting much of a bounce off that. Looking at ABX here in the context of the daily charts, you are coming right back down to the low that you had at 1810 on October 17th. So see if that 18 level can hold. And what did you say what the secondary price was?
1835. So that's an area where it's probably going to be a relevant number, because that is where the pricing is. So those numbers often become a magnet because people will have positions on from them. If you subscribe from the secondary, you're going to get the stock at 1835. So all of a sudden There's 163 million shares worth going to be, of participants going to have that 1835 as a break even on the stock. So that becomes a relevant number for both support and resistance. It could be a key swing number. Let's move on here for a second. Take a look at NQ. We've talked about it pretty much every day for 3 days in a row, but it is the biggest mover, it seems like, always. Obviously, it's been coming back here. Ever since it made the low a couple days ago, it's $7.58. Look at this. You bought the low, a 7.58, just 3-4 trading sessions ago. All of a sudden, you have doubled your money on NQ.
Yeah,
Maybe McCrory was right.
they've come out and the company's really tried to defend itself as far as its cash position and kind of qualifying its operations. When I see a big move at something like that, I mean, I just don't automatically think the stock's going to zero. I like to be a little bit of a contrarian. You closed off at 14.40, and you're trading up at yesterday's high right now in the pre-market at 14.88. So call that $15 level, a little bit of resistance. You did have a pre-market high at 15.20, but as the case would be in a stock like this, you probably had people that are just we're buying this thing just because of so many standard deviations out of the norm, buying it for a scalp. They could care less what this company's ever going to do or whether it's going bankrupt. So, yeah, so it's not going to rip right back up to 22 where it was trading before the report, but certainly there's a lot. I would not want to be short this thing above the pre-market high at 15.20.
Let's move on to some of the upgrades and downgrades because there is a ton of big ones here actually today. Let's start with Facebook. They are getting upgraded at Argus. So Argus jumping on the bandwagon, the first brokerage, I believe, to upgrade since the earnings report there. And stock's trading up here 80 cents on this upgrade.
Right. What a day in Facebook yesterday. We were talking with Sanglucci during the pre-market trading, and the thing was just getting killed. And what I noticed was that right before the open, we talked about the prices and in the pre-market trading. I believe it made a low like right around 46 and a quarter or something like that, like right 9.25. We were off with Sanglucci, and then in the regular session, it opened up at 47.15. It dipped under 47, but didn't get to that pre-market low. Boom. Turned around and just took off. What I'm going to be keeping an eye on in Facebook over the next couple days, obviously you have a huge range from yesterday. 52 was yesterday's high. We'll definitely keep an eye on that as resistance. But the $50 level, Dennis, can Facebook hold 50 here? They've had the earnings. They've had the big movement. Now I would look for a couple days of consolidation. And, we keep maintaining closes over 50 here. I don't think the move to the upside is done. You start closing under 50, people are going to start taking some chips off the table.
It was a good reversal day yesterday. Obviously, the stock was looking very weak off the hop when we were on with Sanglucci, and I was like, oh, this is not good. But they came in and they started buying it, and they bought it all morning. They bought it all basically until about 1:30 or so, and then it ran into a huge seller at 52. There was a guy selling a couple 100,000 shares up at 52. Tried to take him out a couple times, could not, and the stock obviously gave back and then sold off over $2 at the end of the day. Getting the upgrade here again, getting a little running start at the 52. We're still $1 away from it. I think it might try to test that area again today. We'll have to see if it can take that guy out of 52. Like Sanglucci always talking about trading in between the size and doing different things. And I mean, there is relevance to that for sure. And when you see somebody selling a couple 100,000 shares, people step ahead of that guy. They know he's real. He's sitting out there trying to get out. And they stepped ahead of him yesterday and he couldn't get done. So, I mean, a couple 100,000 shares is big on any stock, especially on Facebook.
51.09 pre-market high, just trading 4 cents off that.
Weight Watchers obviously lost some weight yesterday with the big sell-off in the stock. Downgrade at Barclays today, so more pressure on shares of WTW. It's trading down another 50 cents here in the pre-market. Closed near the lows, obviously had lost almost $8 yesterday. So closed near the lows at 32.11 is taking out those lows today.
Pre-market low here, 31.56. Not a lot of volume trading here, so I don't know how much credence you could put in that. I mean, I know the dailies aren't going to do anything here. I think we might even have to go out to a monthly chart to find some support here in Weight Watchers. What a reversal here. Perhaps if you're waiting here, you want to make an entry into this on the long side or looking to cover a short. You might be looking at that low that you had in October of 2010 at 30.94. Call it the $31 level, but you certainly can't just stop hopping back into this stock until at least you got a double bottom or something in place to lean on if you're taking to take a long position in Weight Watchers. I tell you, my brother-in-law Daniel, if you're listening out there, hello. He loves it, man. He counts his numbers and everything, and he's lost a lot of weight. So I guess he's the only one.
Well, the shareholders are losing some weight looking at their share price, probably, so they're throwing up looking at it. But let's move on here. Netflix upgraded at Baird, up $8.52 this morning at 331. So here's a stock that's consolidated for 4 or 5 days. Baird putting some upward pressure, and this stock's going to trade possibly out of this range here this morning at 331.
Right, you got to pop. You got to pop to 332.51. You've fallen back to the 330 level. She's up $8.50 here on an upgrade. Dennis, how does that fit into your upgrade formula? I mean, is that a little bit overdone, or especially by someone like Baird, or is that validated?
It's kind of where it should be because higher beta stocks. So, and I always try to figure out what's the upgrade worth. How much, per share is that upgrade really worth? You get a stock on, an upgrade on like a stock like Procter and Gamble will move up, 1.5%. Netflix beta quite a bit higher. I would probably give it 2 to 3% just for the weight of that upgrade, and that's where it's at right now. So I think they're pricing this pretty correctly. It's a matter of whether the momentum's going to continue now as we come into the close. I mean, or into the actual trading day. We did have 3 or 4 tops in the whole 327, 328 area. You're trading above those tops right now. And then I look, back to the 25th and the 24th where we had some highs of 336, 337. So I
Yeah.
kind of feel like that's where we might migrate up to here and test that next area today.
Okay, I'm looking at those tops here at 328, 329 to act as support. Major resistance, the highest we've traded since that earnings debacle is 337.20. Just real quickly before we go to a break here and get our special guest on, we got a request preview for Newmont Mining here, a gold stock. Let's just take a look at that and see the gold stocks have really been out of favor. Let's see, Newmont Mining here having a little problems.
Yeah.
Yeah, NEM. You got any opinion on that, Dennis?
Well, I'm looking at it here, and obviously on yesterday, you kind of had a weak day. It's been consolidating around the whole $28 level, but we kind of broke down yesterday. That's the first sign that I'm like, ooh, it doesn't look that great for the stock. 26.93 was the low yesterday. We got to stay above there. If you're trying to pick bottoms on that, you don't want to see the 26.93 low get taken out because there was a gap down below, back, just trying to go to the dates there. The 16th, we gapped up from basically $26 up into the whole 27 area almost. So start to get below it starts to get some air in the 26 handle. So if I'm trying to be bullish this stock, and I don't know if I am, I'd want to see a whole 26.93, the low from yesterday. Below there, I think it could cascade down to the 26 area.
Right. And now, I mean, you did have the news out on Barrick, but that was a secondary. That's really issue specific
For sure.
news. Yeah, it's not as much related to it. So we'll keep an eye on Newmont Mining here. We are going to take a short break and bring on our guest from Belus Capital Advisors, Brian Sozzi, who had give his opinion on retail stocks. Welcome back to pre-market info. We have Brian Sozzi from Belus Capital Advisors. How you doing, Brian?
I'm doing great. Happy Friday.
Dennis, say hello to Brian.
Brian, how's it going here? I don't know if Brian can hear me or not. Joel, can you hear me?
Can't hear.
Brian, can you hear Dennis?
I can't hear Dennis right now.
Joel, you might have to handle it if you can't hear me on your end then. I think
Okay,
we're having
Brian,
a few technical
I know you
difficulties here.
follow
Sorry about that.
retail stocks very closely. You've been following J.C. Penney here for quite some time. Can you just please give us your what initially got you following this company and forming kind of a negative opinion on it?
Well, what got me following is that I was dragged to J.C. Penney as a kid, almost every weekend as a kid. So it's a natural extension of a place that I've been very familiar with, and that's a great, I guess, tidbit to every investor out there. You want to start with companies that you have some form of emotional connection with. I think it just helps you make a better investment decision. But in terms of J.C. Penney, I've been personally been negative on it for going on 2 years, and so while the stock is up 20% from the October 22nd lows, at least for me and my company and my clients, we're still looking at this longer term, and we've made a killing on it because JCPenney, the fundamentals of the business, despite what the CEO has been saying probably over the past month and a half, just don't support the notion that the company is going to just be in a strong financial position going into next year.
Okay, back in July, you cited concerns over cash and the liquidity position of J.C. Penney. You were worried about perhaps some of their big suppliers, perhaps becoming a little bit nervous about doing business with them. What is their current cash state and liquidity status?
Well, first, JCPenney put out a number. It was $2 billion. By the end of the year, they're looking to have $2 billion in total liquidity, and that has somewhat served to, I guess, temper slightly some of the concerns that their vendors had, whether it's a Ralph Lauren, whether it's some of the small suppliers, or even whether it's a Nike. So they're not getting that backlash as of yet. But by the same token, the people that we still talk to in terms of contact, the vendors remain very nervous because that total liquidity number, that's $2 billion, not from internally generated cash. This company has raised massive amounts of debt. They've hurt their income statement significantly more because they've had to raise a lot of debt. So, in many respects, they're anxiously waiting on the holiday season's performance to see how they approach JCPenney going into the new year.
And what is the company made? I mean, they come out, they say sales are going to be okay, or they're looking for better sales. You were looking for an upturn in kind of sales. I mean, what have they done to rectify the problem?
One chief thing they've done is they've gone back to discounting, but it's not enough to discount. You have to basically plaster the fact that you're discounting all over your store, every piece of signage, and it's taken a while for JCPenney to undo all the absurdity that Ron Johnson did, taking away many of the discounts and much of the signage. Just go into a JCPenney store, you can see little signs on the table, 30, 40% off in big red markers. So they've told the consumer, hey, we kind of resemble the JCPenney that you grew up with. The problem they're running into, or it's twofold. One, the customer still doesn't trust that they offer the lowest possible price because of the merchandising mistake they made last year. And then number two, and we're seeing this a lot of JCPenney stores that we walk, the furniture at the new departments with about 505 stores at JCPenney is not moving. So that is cash basically laying idle on the company's second floor despite 30, 40% off discounts, and in some cases 50 to 60% off. And to me, that's very alarming.
Right. So right now, at the current rate of cash burn here, and what's your forecast? I mean, I know you got a tough job, analyzing these numbers and looking at the cash position, taking the debt into account, looking for an uptick in sales. I mean, at this current rate, how long do you think they can survive?
If they don't have a very robust holiday season, and what would be a robust holiday season for JCPenney? their key metric in terms of same-store sales may be between plus 5% and plus 8%. But I encourage all people who think that JCPenney is just screaming by at these levels to look at how their margins have come in off of those sales. In the past, probably in a quarter half, as the CEO is hyping the amazing job that JCPenney is now doing out in public forums. The gross margin, which is a very key measure on any retailer, but specifically JCPenney, has not normalized yet. So to drive increased sales, JCPenney is basically giving the store away. And if you're doing that and you don't see a bottom yet in margins, I just don't see an encouraging cash outlook yet. So that's why I'm concerned as you go into 2014.
Warren Buffett was on CNBC I believe, last week, and he said, he wishes the company good luck. He didn't say he was going to make any kind of investment at the time. Carl Icahn has said, he's hands off on this. Is there any other white knights out here that may put a big cash infusion in the company? I know George Soros is probably choking on that position that he bought at $18-19, and Ackman already jumped ship. Is there another white knight out there that may come and rescue the company?
No. And the bottom line is, why those old dogs and Warren Buffett and Carl Icahn staying away from this also old dog in JCPenney? Because we've seen very specific examples in the past, whether it's Circuit City, Blockbuster, linens and things. When a retailer hits these type of pain points, concerns, when their sales are decreasing so much, their margins are basically vanishing into thin air, they're having to raise debt, their vendors are concerned, it sets off a cascading effect. And those old school buy low, sell high guys like a Buffett, like an Icahn, they just don't, I think, have the trust that the stock has bottomed quite yet. Now, ultimately, I thought that a Warren Buffett might be interested in a JCPenney at some point because it's a business that he understands. It's very Americana. It would just be a matter of him maybe making, just getting the right price, the right market price. Now, the right market price might be another 25% lower from where it is today, but I think those guys have seen these retail examples in the past just cascade, and they're going to wait on the sidelines, and that's what you're seeing from many other guys too.
Yeah, similar to his Bank America move when he got the preferred stock and options, and he did very well on that. You mentioned earlier in the conversation that you were able to profit from this for you and your customers. Could you just explain to our viewers a little bit what trading strategies employed? Did you just go short the stock? Did you do options? Mm-hmm. Did you sell calls? Or what kind of trading strategies did you employ to take advantage of this downturn?
Well, a little background on Belus Capital Advisors. We use a buy, sell, and hold rating and a price target system. Super simple. And this sell rating call on JCPenney is something that I've had from a prior employer since the day Ron Johnson came into the firm. It was around January 2012. So I carried that call over into the company I just founded, Belus Capital Advisors, with the sell rating. A month and a half ago, we completely pulled our price target from JCPenney. I think this remains a very volatile name, and me as an analyst, it would be reckless to have any price target on the stock. I know Imperial came out with a dollar price target. We have no price target. I think it's just a reflection of the story that just doesn't remain very fluid. So we have told clients via our sell rating, if you want, they've been short, basically. That's how it works in many respects.
So you leave it up to the clients whether they want to short the stock or do options. You just make the recommendation and then you let them employ their own trading strategies?
Correct. They'll reach out to us. We'll come out and we'll say we have a sell rating on JCPenney. This is what we suggest. And the simple way to do it is basically they've been short the stock just based on our client status.
Okay, you filed the technicals on it at all? I mean, you did get a double bottom here at the 624, 627 level. Since that time, perhaps you had some pattern recognition traders leaning on that double bottom. You're bumping up here to 780. You've had three highs between 770 and 780 here in the last three trading sessions. We're trading up at 770 in the pre-market. Do you pay any attention to the technicals, or are you pretty much going to stick with your fundamental analysis?
Hey, that's a lot of fancy chart stuff to just throw at me, but I do watch the technicals, and yes, as I mentioned earlier in this conversation, JCPenney is up 22% from the October 22nd low. I'm more inclined to use fundamental analysis. That's how I've been trained. While I respect the chart work of many folks, where this JCPenney is just not a name for us. We don't want people trading this. It remains a volatile name, and the fact is, one bad piece of news from JCPenney going to holiday season, the stock will lose another 20%. And I don't want my clients holding the bag on this dog.
Okay, just two other things here. We'll move on. Number one, I mean, JCPenney here is the ugly story, okay? But there are other retailers that are doing well. Do you see other opportunities in the sector? And if so, what are they?
Well, within retail, we just had a viral story this week at Belus Capital Advisors and Sears. We took some pretty shocking photos that got profiled in the New York Times deal book. And that's another retailer that I think, I'm 2 years into this call, so date is date. I think in my lifetime, Sears will no longer be in business because they are going to run out of assets to sell, and that will expose their operations that have been massively underinvested in and that are not generating very robust levels of cash. In terms of retail, you want to look for what companies are growing, what company is doing it absolutely correct. In Under Armour, not an open pick for us, but if you look back at their recent earnings transcript, they're doing lots of things correctly. They have new platforms for growth globally. That is winning. That's something you want to think about in terms of if you want to get involved in the retail sector. Another one would be Starbucks. I know the company got hit on its earnings results because the transaction growth slowed in each region of the world on a sequential basis, but they're doing so many things correct. They've established many new platforms for growth. So if you can get it at a more attractive valuation, that would be a name to consider. But outside of that, we remain very cautious on retail stocks, consumer discretionary, going into the holiday season. I think it's going to be a very challenging season, and while the investment community appreciates that it's going to be a challenging holiday season, there's still some risk as these companies report earnings in November and provide their outlooks for the holiday season.
And what about these teen retailers? I mean, the occasional time that I go to the mall, I walk through all these stores and I see these teen retailers. I can't even pronounce their names, like Aeropostale or AEO. I mean, I look at I'm like, who would buy one of those pieces of clothing, let alone a whole rack of them? I mean, what about, are there any the teen retailers that you see perhaps following the same path of JCPenney?
Well, amen, brother, because if you go onto our Belus Capital Advisors homepage, you'll see Aeropostale is one of our biggest calls this year. We've had a sell rating on it basically for the past 6.5 months, and that's just a reflection of very competitive industry within those three brands. The margins are getting very tight, and the companies are having to compete more aggressively versus department stores, versus Forever 21, versus H&M. I don't think you're going to see a JCPenney situation within Abercrombie and American Eagle, for example, but I would watch Aeropostale. If they do not have a good or a decent holiday season, I do see a case where they might have to raise money in 2014. It's something that was quietly talked about on the last earnings call. They obviously didn't want to admit anything to that, but they really need to have a bang-up season because I feel as though their investor base and the analyst community are getting a little concerned.
Okay, we're coming into the holiday season, and there's always a hot new product, like an Elmo doll or something like that gives a boost to a retailer. What do you see any stores that perhaps are going to capitalize, come out that be selling a new product or get a little boost from this holiday season?
Yeah, two of them. One would be GameStop. The GameStop is they've closed a lot of underperforming stores. They're repurchasing large amounts of their stock. And then number three, they have the two big tailwinds. They have the Sony new PS4 coming out. They have the new Xbox coming out. And I feel as though those are going to be the must-have gifts for the holiday season outside of all the fun stuff that Apple has put out into the market, especially today with the iPad Air. Another one would be, who also benefits from that trend, Best Buy. Best Buy is in stock to be rated to buy for the past year at our company. It's one of the most significantly outperforming stocks of the year. They're doing many things correctly. They've reorganized how their stores are laid out. They're getting more traffic. And finally, they've started to improve their price perception in the minds of the consumer, where back in the day, the consumer would think Amazon would offer the lowest possible price on every piece of electronic offered. It's not necessarily the case anymore. Best Buy has really closed the gap, and they should have a pretty decent holiday season.
And just to view another retailer, I know it's not your brick or mortar, but you have a company like Amazon. Do you carry any kind of rating on that?
We don't carry a rating, but just my own general opinion, if you look back on the last earnings call, it's hard for me as a fundamentally trained analyst to justify Amazon's valuation when they're driving low single-digit returns on invested capital. And I know the street continues to give this company a pass that they're building all these warehouses that are going to be same-day delivery meccas, and they're going to change the world. But at some point, and admittedly, I don't know when that point is going to be because the market continues to act favorably to these subpar earnings reports. They're going to have to deliver. They're going to have to deliver strong earnings and some signs that their returns on invested capital, their returns on all these initiatives that we don't know anything about necessarily, we don't get Kindle sales on the earnings results. They're going to have to show the streets. They're going to have to show the streets in performance.
Right. Okay. I know we talk about fundamental analysis, and you cited that at the beginning of the call. And I know, like, if I go into a Capital Grill in a restaurant or something like that, and I have a bad meal, I have a immediate impulse to come in the next day in short Darden restaurants or something like that. But you've had some recent experiences, I guess, at J.C. Penney and dealing with the store, so doing your fundamental analysis by being in the store. Can you just give us a little update on that experience?
Mm-hmm. That's a phenomenal thought. You totally capture my thoughts. There's always been my opinion that research is more than sitting down, making a 5,000-step multi-factor model, sharing with all your friends on the deal team, and you're suddenly the coolest kid on the block. You have to get out. In the case of retail, you have to get out in the stores. The truth is always told in the stores. So for me, for the past, let's say, 6 months, as JCPenney shares were absolutely cratering, based on my relationship with management, what our meetings were telling me, plus all the stores that I walk saying, hey, this merchandise is not even moving, just to help add another layer of analysis to the numbers, to the things I learned from talking to the company. But I encourage all investors out there to get out in the stores, get out and go up to a new Caterpillar piece of machinery if you have it by you. Look what they're doing. Touch and feel the product. It just adds another layer of help. It helps you understand why a company that you're invested in or looking to invest in may be doing good or may be doing bad.
Right. We're on with Brian Sozzi, Belus Capital Advisors. Has been closely following J.C. Penney stock here during its recent decline. If our viewers out here, listeners in the chat room, have any other questions, I have one final question here for Brian. So please put those questions in if you have a favorite retailer you'd like to get his opinion on. But what are you looking for? I mean, we've had maybe this is just the way that I look at the markets and look at the possible spending. The markets have had an excellent year here. People probably have a little bit margin, extra cash to spend during this holiday season. What's your forecast? Do you think we're going to see, an uptick in shopping this year? Perhaps people, taking some profits in the stock market and buying some more Christmas and Hanukkah gifts.
Yeah, well, not to throw haterade over Santa's head, but I do see I see a cautious consumer, and I see them spending cautiously for the holiday season. So where am I getting this ridiculousness? First of all, it's how they've spent for the entire year. They've bought a lot of items close to need more recently with back to school, and the more consumers that we talk to and poll, whether it's in the mall or wherever, they are analyzing every single purchase in a way they have not done, let's say, 15 years ago. They remain very mindful that they may not necessarily have a job 6 months down the line. They remain mindful of the fact that the prices for everything still remain very high and their incomes are not growing. That's one subset for the consumer. Another one would be, and I guess something pretty important today, given the cutbacks start today in terms of food stamps, look at what's going on in dollar stores. Look what's going on in Walmart. These people, that low-income consumer pulling in, let's say, $35,000 and under, and you have 2 or 3 kids, they're completely skipping discretionary departments of the store, and they continue to trade down in terms of what items they're buying. So they may not buy a brand name product. They may buy a private label from Walmart, private label from Family Dollar. So it's just not a normal consumer spending environment out there, despite higher stock prices, higher home prices, because when push comes to shove, I don't have a magical bean or a magical chip that I can cash in at Walmart and Target that says, hey, here are my higher stock prices, give me $500 of merchandise.
Okay, my favorite viewer here in the chat room, DJ, always comes up with good questions, and we'll wrap up our interview after this. He's looking at TJX companies. It's had a great run this year. What's your view on this company? I mean, it's recovered from a bad period here. It's trying to inch up to new all-time highs. Do you cover the stock, and what's your short and long-term opinion on TJX?
Yeah, TJX is one that I've covered for quite some time, and they fill the qualifier of a retailer growing. They're growing within Marshalls. They're growing within Home Goods. They recently launched a website, so they have and their European business, for some reason, basically for the past 2 years, has been very robust in terms of same-store sales. And obviously, they benefit from the consumer trading down, let's say, believe it or not, from a JCPenney, from a Macy's. But I will say this to DJ out there, look at the company's operating margins, let's say over the past 4 quarters. The gains are starting to peak a little bit. And when you see that in a retailer, especially the way TJ Maxx is valued at these levels, you're worried about, well, if the company has a good holiday season, or if when they report earnings shortly, does the stock sell off on the news? That would be something I'd be mindful of.
Well, we've had Brian Sozzi of Belus Capital Advisors, who's been following JCPenney, many other advisors, and doing an excellent job of it. Brian, we got a little Sozzi fan club in the back here at the Benzinga News Desk. They love you, man. And, thank you.
Thanks, guys. Have a great rest of the day.
Okay, we'll talk to you soon.
Definitely, man.
Thank you. And now we're going to go to Mighty Joe Young with the news.
Oh, good morning, everybody. A very special thank you to Brian Sozzi for coming on the show today. Hope he enjoyed our chant a little bit. Moving into today's headlines, Globe and Mail reports that Amazon is taking on Canadian grocers. The retail giant, which built its business selling books and entertainment through the mail, launched its new grocery category on Thursday in what's certain to be an intensifying battle between grocers. Amazon says the initial selection includes 15,000 non-perishable grocery products like coffee, cereal, and baby food from a variety of brands such as Campbell, Nestle, Pepsi, and Kellogg. Facebook is looking to avoid distracting users with too many ads, Bloomberg reports. Facebook won't push the limits of how many online advertisements people can tolerate, saying that it doesn't plan to increase the balance of ads and that it shows to users in their news feeds. The companies said ads took up 5% of the posts in news feeds in the second quarter and have risen only modestly since then. That amounts to about 1 ad for every 20 photos, status updates, or other posts. Fannie Mae has sued 9 banks, alleging that their manipulation of the benchmark London interbank offered rate, which 4 of them have admitted, cost the mortgage financing company about $800 million. The United States government-owned firm alleges that the banks, including Bank of America, J.P. Morgan, Chase, and Citigroup, acted to suppress the rate through quotes they submitted to the British Bankers Association, according to a complaint filed Thursday in Manhattan Federal Court. Walmart is beginning online holiday deals today. A report from Reuters says that U.S. retailers facing the shortest holiday season in years are preparing to assail customers with deals and promotions this week. Walmart Stores is kicking off its online deals today, on Friday, a month earlier than usual, underscoring worries that intense discounting aimed at luring budget-conscious shoppers could result in the most tepid holiday spending rise in 4 years. Notes from an Obama administration meeting about the problem-plagued Obamacare website, healthcare.gov, indicate that 6 people signed up for the healthcare law on its first day. Documents released by the House Oversight and Government Reform Committee reported. Fox News' Ed Henry told Megyn Kelly on the Kelly File Thursday that the documents released by committee chairman Representative Daryl Izza are not official enrollment numbers, but say that as of the morning of October 2nd, 6 enrollments have occurred so far with 5 different issuers. Wall Street Journal reports that telecom's taking on cable firms over the selling of TV. Verizon and AT&T are nearing the market share of cable operators in areas where they operate, according to third quarter results released by cable and phone companies in recent days. The top two cable providers, Comcast and Time Warner Cable, shed 435,000 video customers in one quarter, while AT&T and Verizon added 400,000 subscribers. Both phone companies have shown a greater willingness than their cable rivals to experiment with delivering movies and TV programming over the internet outside the traditional pay TV bundle. Shareholders in Oracle are unhappy with Ellison's pay package, New York Times reports. More than 2 billion shares are voted against the company's say-on-pay measure at Oracle's annual meeting on Thursday, while nearly 1.6 billion were voted in favor of the proposal. Subtracting Mr. Ellison's roughly 1.1 billion shares, however, suggests that the margin of defeat was bigger than the initial number suggests. The technology mogul received $78.4 million for the 2013 fiscal year, which ended in May, according to Oracle's proxy statement. Financial Times reports Paul Allen's fund urges Microsoft to spin consumer business, including search advertising and the Xbox gaming console. Speaking at the Financial Times Investment Management Summit in New York, Paul Ghaffari, investment officer of Mr. Allen's family investment office, Vulcan Capital, said the overwhelming majority of Microsoft's earnings were generated by selling software and services to business customers. Mystery still surrounds the Google barge in the San Francisco Bay. Apparently, it is not a water-based data center, but a Google Glass promotion featuring high-tech showrooms and a party deck. That's what San Francisco TV station KPIX says, which reported that the barge will be an exclusive invitation-only showcase for Google's new wearable technology. Canada's Border Services Agency says it has stumbled upon a different kind of Halloween surprise and some pumpkins this year. Authorities believe 3 pumpkins found in a woman's luggage at the Trudeau International Airport in Montreal Airport on Thursday were stuffed with approximately 4.4 pounds of cocaine. Jake, they stole your idea.
Oh man, I guess I wasn't that original. Yeah. Wow, that's in pumpkins. Really?
Yeah, that's right.
Pumpkins? Wow.
Well,
all right. I guess I gotta try anything, right?
Well, speaking of cocaine and pumpkins, on a more related note, Sir Mix-a-Lot knew what he was talking about, apparently. A new review published by researchers at the University of Oxford and Churchill Hospital in the UK suggests that people who carry their body fat in their thighs and backside aren't just carrying extra weight, but also some extra protection against diabetes, heart disease, and other conditions associated with obesity. It is the protective role of lower body, that is the thigh and backside fat, that is striking. The protective properties of the lower body fat have been confirmed in many studies conducted in subjects with a wide range of age, body mass index, and comorbidities, the researchers write in the most recent issue of the Journal of Obesity. Sir Mix-a-Lot knew what he was talking about.
Yes.
All the ladies want to ride in my Mercedes, I can tell you that. Well, that wraps up today's headlines. I'm going to send it over to Snaky Jake here for the morning movers.
All right, thanks, Joe. I figure I'll give you guys a quick update on what's going on out there in the markets right now, and then we can get you guys transitioned back into the show. Joel, feel free to pop in anytime. Do have dry ships on the move this morning. That's Delta Romeo Yankee Sandy. The whole dry bulker shipping group tends to move together, so keep an eye on that. The Baltic Dry Index is up once again this morning, up 1.4%. They basically move on that index every morning, although they were on the move before this was released, so dry ships has been on the rise. We also have, as you guys probably know, First Solar on the rise this morning. That is also dragging the whole solar sector upwards. So First Solar has been kind of trading around this 55, in this range between $55 and $54. It's at $54.60 right now. Company beat significantly on the bottom line and on the top line, but it did lower its fiscal year revenue guidance while raising its fiscal year EPS guidance. So managing to get more efficient on the bottom line while bringing in slightly less revenue than expected. Also got some movement we saw earlier in EDMC. It's Echo, Delta, Mike, Charlie. Not a whole lot anymore. Looks like the trades were just earlier this morning. There was a rating out on it earlier this morning. It came out about 6 this morning. BMO downgraded the company to an underperform basically just Radiant saying that the company's valuation is a little too high right now. So keep an eye on that one at the open. Very thin
Jake,
volume right now, but there could be action.
Jake, I just want to break in here. We did have some sell imbalances on the close
Hmm.
yesterday, and seems to be a little follow through here. Dennis is giving us a little report here of some serious opening sell imbalances this morning. Not sure if they're going to flip or not, but 400K to sell in GE, 300K to sell in Merck, 150K to sell in Pfizer, and 102 grand to sell in JP Morgan. So we'll take a look at some of those technicals and those stocks after you resume your report.
All right, sounds good. Do have a couple others moving this morning. I want to knock those out real quick. Netflix is on the move as well. Had an upgrade this morning. Get that it's November Foxtrot Lima X-ray. Company did get an upgrade from Baird this morning, moving it to an outperform rating while giving it a $425 price target. Basically, they were just saying that its original content strategy is going to make the company's business much more defensible. So they're up about $8 right now. Keep an eye on that at the open. The volume is kind of picking up ever since about 8 a.m. So Netflix on the move. Western Digital moving to the downside. That's Whiskey Delta Charlie. Company did price its secondary offering late last night. It was 10.87 million shares, looks like, and came in at $67 a share. Shares are trading around 68, 67 the last time I looked. So we're still a couple percent below yesterday's close, although they have came off the lows. The low this morning that I'm seeing is 67.74. So they've been on the rise ever since. Watch that one at the open. Could get interesting. But Joel, that's kind of what we're looking at on the movers right now. Just some of the typical names moving around in the pre-market. But we'll leave you to do some of the technicals and some of those imbalances yesterday.
Okay, all right. Let's take a look at some of those stocks that do have some sell imbalances here. See if we can make heads or tail of where these stocks are going to open here. GE, which had a weak close yesterday, closed right on its low of the day, has had its nice run after earnings here. Taking a look at possible support levels here. Yesterday's low, we are trading closed week, closed at 26.12, or excuse me, 26.14, 26.12 low. So that will be your first resistance point. Coming on the downside here, I don't see a lot of support in the 25.90s, but I do see a double bottom at 25.76 and 25.80. Still another 20 cents away from here. Doubt GE will get that far down on the open, but some possible levels to take a look at in GE. Merck has just kind of been going down here since it's had its earnings here, trading down in the pre-market as well. Let's just take a look at where some pre-market levels for our traders are in Merck here. Just Merck was trying to hold that $45 level, four lows in a row, 45.08 to 45.21. We are now trading below that level. That area will act as resistance now. If coming back up, those sellers want to get out at 45. Just sitting on the pre-market low here at 44.76, low 77 print here. Going on to dailies here, you did have a low at 44.60, so you want to keep an eye on that. That was your May 3rd low in Merck Company. The other issue here that we were talking about with a possible sell imbalance, the big bank, JP Morgan here. Sellers are taking this opportunity to hit the stock a little bit further here in the pre-market. JP Morgan here has been trading really between 50 and 54 here for the better part of a couple months. Coming now onto the more of the daily support area. We are trading through yesterday's low at 51.54. We're trading at 51.44. You have a little support at 51.38. But JP Morgan may be aiming to fill the gap that it had down going back a couple sessions ago. Had a gap situation, or did it fill that gap? A 4-cent gap at 51.34, 51.38. So minor support coming up in that JP Morgan. Another issue here with a possible sell imbalance. Pfizer had the good earnings, made that wild sprint over 31. Now coming back to reality, back under that 31 level, and just want to, I know a big stock like this that trades a lot of volume, a lot of institutions, you do get some pretty good technical formations. Double top and Pfizer to 31.28, 31.35 level. We've come off that, and you just have to respect that support though, just under 30.50 at the 30.42 level. 30.42, 30.45 were your 4 and 5 day lows. And if my memory serves me correctly, which more often than not it does, they did hit it down to 30.45 in the pre-market on the days that earnings was announced. So 20 cents away from some excellent support in Pfizer Corporation. Microsoft getting a little boost here in the pre-market. I believe there was some chatter here of spinning off some companies. Now Microsoft is rallying, and what I've noticed about this stock, you had the gap up day. Traded, on the good earnings. You traded over 36, traded to 36.29. Then you've had 4 days of consolidation between 35.26 and 35.79, getting a little pop in the pre-market here, trading at the high 36.69. But just folks, just be aware here that 35.79 has just been the trading range for the last 4 days. Similarly, on the downside, you've had multiple lows between 35.26 and 35.43. So a couple parameters. Maybe today's the day that you get a little bit of breakout or breakdown in shares of Microsoft.
Joel, take a look at the JC Penney chart really quick. Just a sec before the open here. Looks like some of Sozzi's comments might have taken the stock down. I see a nice little spike lower there.
Well, it's running into resistance, and boy, we threw a lot of technical numbers at him, and he came up with a pretty good answer here. I mean, what's going to take to move this stock up here is going to be a good holiday season. Not sure if that's on the horizon here. Opens up here though. J.C. Penney opens up at 771. Okay, so that 7.80 was yesterday's high, so we'll be keeping an eye on that here in today's trading. Let's take a look at the S&Ps. They're out of the gate here, kind of strong here, trading at the pre-market high. 56 even. We just ticked 56 even here, falling back a bit. So let's see if we can get some follow through off that opening print.
Hey, Joel, you want to pull up the Ford chart really quickly? Company just announcing October, auto sales up 14%. See how the news is reacting that stock, if you will, sir.
Okay, Ford's here. My daily chart is not looking real pretty here. Waiting for more data. What I did notice about Ford Motor Company was that it had the earnings, had the pre-market pop over 18. I believe it got to 18.20 in the pre-market, and that stock has been straight down ever since posting good earnings here. 17.10 was your low yesterday. You were trading 17.15 low. I imagine you're going to grind here between 17 even, 17.10. Nice round number like that. So just probably some selling off the earnings.
We did get the Chrysler numbers just a couple hours ago, and we are still waiting on the GM numbers. I think those are usually around 10. Later in the day, around 3 or so, we will get overall auto sales numbers for October. So heads up for those traders.
Notice GM kind of going a separate pattern from Ford after earnings. Has had a good day, still maintaining that gap level in GM. Let's keep an eye out. The low on earning. J.C. Penney hitting 780, folks, here, trading up to 782. So J.C. Penney is approaching a resistance. The low on earnings day for General Motors with 36.95 here. So let's keep an eye on that level as support below that 36.95 level. Excuse me, the low on earnings day was 36.78. So under 37, 36.78 will be a level to keep an eye on here in shares of General Motors.
You're not going to call them government motors, or what's the other one you say, Joel? Genuine motors or something like that?
Well, Ford is found off roll daily, and the others one I can't really say on the air.
Uh oh.
So let's move on here. S&Ps are making a new high here, 56.75, just kind of inching up. I do want to bring up Netflix here. Did get that upgrade. Traded much higher in the pre-market. Let's take a look. Traded up over 330 in the pre-market here. I believe it was on the upgrade by Baird here in the pre-market at trading today. You did get up quite a bit higher than this level that we're trading at. We got to 332.51, so let's keep an eye on that as a potential resistance level in shares of Netflix. Just was doing some chart work on the Googster last night. Made a new all-time high yesterday. I believe it 10. Let me get the exact number here for you. For you people that are looking to get out at the all-time high, the all-time high in Google made yesterday was at 1041.52. So that's your major resistance level. But what I'm looking at more importantly in Google, at least for today's trading, double close here. $1,000 stock. You have two closes within 16 cents of each other, 30.42 and 30.58. So those are some big levels to keep an eye on. That 10.30 level, trying to hold on this long term. Would not like to see it trade below 10.30 today, or even make a close on that. J.C. Penney's hit that 782 level, falling back a bit, so can't really call it a breakout yet. Microsoft did get a boost here in the pre-market. Couldn't quite get to that resistance point in the 3570s. We're just keeping an eye on that because the last 4 days it's made highs in that area. Let's take a look to see how these sell imbalances affected stocks. Well, people use the sell imbalance in General Electric, opened at its low, 2604, made an 03 low. So that was a sell imbalance that you could have taken advantage of if you were looking to cover short or get long. Looking at JP Morgan here, shares of JP Morgan also had a sell imbalance. That stock has opened lower. Let's take a look at shares of JP Morgan here. Making a low at 51.30. Did have some support in that area as well. Other issues that had a sell imbalance, Merck going down through the $45 level. Has taken out the 45 multiple lows there. Let's take a look at Merck here on the dailies. Multiple lows at 45. 44.83 open, went down to 44.62, so kind of a mixed open here. 45.09 is what you would need to get back up to in order to fill the gap. If there's any other issues out there that you are trading, you'd like me to take a look at here, issues of interest, issues that we talked about on the show, I'd be glad to do that.
Can I ask? Can I ask
Yeah,
this a ticker?
sure. Yeah.
Okay, take a look at NextEra Energy. That is NEE, as in Nancy, my aunt Nancy. Company had a little bit of news, Bloomberg report just before the open, saying that the company is evaluating a possible establishment of a yield co, and says maybe selling at least $1 billion in new equity by year end. But nonetheless, shares are moving higher, up around 3+% right here over the $87 level. How's that chart look, Joe?
It looks good if you're long it here. We've hit 87.70. You have to go back. The stock hasn't traded at this level since August of this year. It traded up to 87.51. So potential resistance here at the 87.50. We've already hit 87.71. So let's see if we can hang in here at 87.50. Perhaps we can make a run at 87, 81. That was your high on August 5th. So a couple tops up there going back to August that if you want to take advantage of this run from under 80 bucks here and at the beginning of the month there, a couple potential areas of resistance. S&Ps continue to make new highs here. Currently trading up 6.5 bucks at 1657.50. So all those people that took advantage of the sell imbalances were able to make some profits if they took the other side of those trades. Uh, ExxonMobil, that's one that didn't quite get the pop here. It had a good day after earnings. Perhaps some people here looking at the close. We are through the close, which was 89.62. So you would have had to been quick here to get out of that ExxonMobil. Now trading at the close. Minor support coming in, and ExxonMobil at yesterday's low, which is 89.20. Quiet day in Apple yesterday, and so far only a 2.5 point range. We are looking at Apple, not much follow through after the volatile day following earnings. Looking at the issue of 521.27 was your low from yesterday. We have not been able to get down to that level yet. Only a 6 point range in Apple yesterday, so tight range. Use that 527.49 and 52 levels. Those are the highs from Tuesday and Wednesday as a major resistance point. First Solar really got a pop. Blew the street away with its earnings. This volatile stock here is following through on that move to the upside, taking out the pre-market high easily here. You had a pre-market high at a little over 56. Now you're trading over the $57 level. Let's take a look, see if we can find some resistance. First Solar here. The recent high of the move, or not recent, but the stock had a pop up to 59 bucks in May of this year. Still $2 away from there. So if you're holding up there for that level, another $2 to go, and I believe that is really a multi-month high for this issue. Also $60, above 59, the $60 level. Had a high at 67.72 in October of 2011, but doesn't look like we're going to be seeing that today. Ford getting a little boost off those positive numbers here, trading up 8 cents. Tesla Motors also having a strong day here. Tesla trading up $5.
Oh, you read my mind. I was just gonna ask what does a pre-market info show without Tesla mentioning? I don't think it exists. It's not possible. Always got to mention Tesla.
Tesla's had pretty good ranges over the last few days, making a high at 165.90 so far in today's session. Find another resistance point at 167.68. That was the high that you had in Wednesday in Tesla Motors.
Alert to traders. Also, Tesla will be issuing quarterly results on Tuesday, I believe it is. That would be November 5th. Those results should be out after the close on Tuesday, November 5th. Should be a lot of volume in shares of Tesla on that trading session.
Okay, all right. Let's take a look at what else is the S&Ps here are moving smartly up here, up 6.25 points in today's session. Don't have any major resistance until you get to the 60.50 level. That was a close that you had in the S&Ps. I believe a couple days ago, 2 days ago, was a 60.50 close. Coming into a lazy Friday here, market's moving higher. You had a 60.50 close on Wednesday, so we'll keep an eye on that as the next possible resistance point. If we don't have any more questions coming out of the Options House room, we're going to wrap things up today. Everyone have a good weekend, and Jake, I know you're not going to want to hear this, but go blue.